Here's a 1-hour price action trading strategy you can use for forex, stocks, or cryptocurrencies. This strategy involves identifying trends, key levels, and candlestick patterns, and it is designed to give clear entry and exit points.
1-hour price action strategy. The key level pullback. Step 1. Identify the trend. 1. Open the 1-hour chart of your chosen instrument. 2. Use a 50-period simple moving average SMA to confirm the trend. Uptrend. Price is above the 5 SMA and the SMA is sloping upward. Downtrend. Price is below the 5 SMA and the SMA is sloping downward. Step 2. Mark key support and resistance levels. 1. Look for areas where price has previously reversed multiple times. 2. Use horizontal lines to draw support below the price and resistance above the price levels. Step 3. Wait for a pullback. In an uptrend, wait for the price to pull back to a significant support level or the 5 SMA. In a downtrend, wait for the price to pull back to a significant resistance level or the 5 SMA. Step 4. Look for price action confirmation. Once the price touches the key level. 1. Look for bullish reversal patterns in an uptrend such as bullish engulfing, pin bar long lower wick, morning star. 2. Look for bearish reversal patterns in a downtrend such as bearish engulfing, pin bar long upper wick, evening star. Step 5. Enter the trade. Buy long. If price confirms an uptrend reversal at support with a bullish candlestick pattern. Sell short. If price confirms a downtrend reversal at resistance with a bearish candlestick pattern. Step 6. Set stop loss and take profit. 1. Stop loss. Place your stop loss a few pips below the support level for buys or above the resistance level for sells. 2. Take profit. Target the next key resistance level for buys or support level for sells. Alternatively, aim for a risk-to-reward ratio of 1:2 or higher. Step 7. Manage the trade. 1. Move your stop loss to break even once the price moves halfway to your target. 2. Trail your stop loss to lock in profits as price moves favorably. Example of a trade. 1. Trend. Uptrend confirmed by price staying above the 5 SMA. 2. Key level. Price pulls back to a horizontal support level. 3. Price action confirmation. Bullish pin bar forms at support. 4. Entry. Enter a buy order at the close of the bullish pin bar. 5. Stop loss. Place stop loss below the support level. 6. Take profit. Set take profit at the next resistance level or use a 1:2 risk-reward ratio. Additional tips. Avoid trading during major news releases to reduce volatility risks. Confirm your setups with volume, for example, increasing volume during reversal patterns. Stick to 1 or 2 pairs instruments to master their behavior. This strategy focuses on simplicity and discipline, which are key to success in price action trading.